Many people have investment portfolios, but few understand how to align them effectively. And even fewer know how alternative investments or fixed income can strengthen that foundation. So are you building a random investment account, or are you building a strategy designed to work together? Quick note, not all investments are created equal. ETFs, individual stocks, alternatives, fixed income, and even cash management, they each play very different roles in a portfolio. Understanding how those differences and how to use them together is what separates disciplined wealth management from just owning investments. In addition, many investors chase returns. For long-term portfolios, it is important to remain disciplined with the holdings that seem to, be lagging in up markets, and really avoid panic selling when going through volatility. So let's break these investments down, because when you understand how each piece works, you can start to see the bigger picture. If you're new here, I'm David Millington, president of Puzzle Wealth Solutions. I've been recognized by Forbes as a multi-year best in state wealth advisor in Illinois in 2021 and in North Texas in both 2024 and 2025. And currently I'm ranked number 124 nationally by Advisor Hub as one of the top 200 advisors to watch in 2025 for firms managing over $1 billion. That success comes from educating, empowering, and coordinating my clients' financial and investment picture. So at Puzzle Wealth, we look to bring clarity and strategy to how your investments fit together. Okay, to get back to today's topic, what are some of the key differences in uses of ETFs, equities, alternatives, and fixed income? We'll keep things very high level today. If you'd like to explore the many details and see how these concepts apply to your situation, we can cover that when we speak. You can easily book a meeting with me in the link of the video description. For the majority of you, I imagine you will learn something new through a meeting like that about investments. First off, let's start with individual equities and ETFs. Individual stocks can provide precision, whether for tax loss harvesting, building dividend income, or expressing conviction in a company. ETFs, on the other hand, offer diversification, lower costs than something like a mutual fund, and efficient exposure to markets, sectors, or themes. So when do you use which? In many cases, we blend the two together, using ETFs as a core foundation and layering in individual stocks where it makes the most sense, especially for tax loss harvesting. This core and satellite approach helps keep portfolios disciplined while still allowing flexibility and opportunity. Next, let's look at the role of alternatives in a portfolio. Alternative investments can provide access to areas beyond the public markets. Things like private credit, private real estate, structured investments. They're designed to diversify risk, add potential income, and reduce reliance on traditional stocks and bonds. At Puzzle Wealth, we look to ensure alternatives fit appropriately, not as some sort of speculation, but as part of a well-rounded plan. And that brings us to another critical piece, fixed income. Kind of boring, but let's explore bonds versus bond funds. First off, we don't currently use bond mutual funds at Puzzle. Instead, we focus on individual bonds that offer set maturities and clear cash flow. Meanwhile, bond funds add layers of fees, and they expose investors to more interest rate risk without the certainty of maturity dates. With laddered bonds, if rates rise, maturities can reinvest at higher rates. And if rates fall, longer maturities can help preserve higher yields already locked in. And this same mindset, clarity, structure, and balance applies when managing cash too. We look to keep most cash working in higher yielding money markets, but with flexibility to maintain liquidity for distributions or opportunities in the market. Our trading desk monitors maturities closely, balancing growth potential with your short-term cash needs. This balance is especially important for retirees or business owners who depend on predictable cash flow. Okay, so far we have covered asset classes. Now let's discuss tax and efficiency. We use low-cost ETFs, individual stocks, and laddered bonds as the portfolio backbone, helping keep expenses low and taxable events manageable. With thoughtful placement, like using tax-advantaged accounts for income assets, efficiency compounds over time. That's where integration with planning tools and tax analysis software like Holistiplan adds significant value to the process. So let's bring this all together. ETFs, equities, alternatives, and fixed income, they're all tools. The art art is knowing how to combine them to align them with your long-term goals. At Puzzle Wealth Solutions, we help fit those pieces together in a disciplined, efficient way. If you would like to explore how this framework could work for you, please click the link below to schedule a Zoom meeting with me or someone from my team. And don't forget, please, to like this video and subscribe for more insights on building wealth. So remember, until next time, stay informed, stay proactive, and take control of your retirement.